The Naira hit new lows at the parallel market at 734 Naira to the US dollar as the Central Bank of Nigeria begins to mop up liquidity from banks to reduce speculative use of funds. Now, Olamofe Mathew, Side Analyst at EDC Securities, joins me for the latest. Thank you very much for joining us on the show today. Let's really start off with the big news of today. The CBN is mopping up liquidity. We are seeing FX withdrawals, all in a move to ensure that we reduce speculative use of funds. Let's talk about that, how this is tilting the balance in the fixed income market.
Okay, so if I get your question well, you mentioned you find to activities in the fixed income market, right?
Yes. Let's start off. Let's start off with what's playing out, especially taking a lead from the MPC's move, mopping up liquidity and debiting banks today, looking at the adjustment of the CRR.
Okay, so generally speaking, in the fixed income space, we've seen bearish sentiments for a while now, right? And of course, a number of factors have led to that. One is the fact that this is not the first time we've seen the MPC took rate hike. It took what they did a couple of days back. It's just the third just fine a year. So bearing this in mind, coupled with the fact that we've seen inflationary pressure, vis-a-vis current macroeconomic realities, borders around poor revenue generation, we've been seeing investors kind of adjust their bids. The lower end of the bid in most of these primary auctions have speak to the fact that investors expect more from the market in terms of return, and more importantly, to kind of narrow a negative return on investment. So, just to allude more to the latest auction that you mentioned, the auction we saw that the stock with closed higher across all tenures. But more important, what is more interesting to us is that if you kind of gauge the sentiments that investors came into the auction with, you notice that investors already priced in the recent rate hike, because if you look at the lower end of the bid across tenures, actually increased, and so aside that, I know you mentioned about CRR and liquidity and how the recent decision is going to impact on FX going forward. And what we think is that CRR, yes, increased by 500 bips to 2.5, is actually going to squeeze liquidity in the system. So going forward, we expect to see tighter system liquidity, and that's going to be very supportive of further not trend in fixed income use. But what is more important is to address the fall in the Naira, like you mentioned, the Naira meeting as well as 730 levels in the parallel market. I think much more needs to be done in order to revive the Naira.
Talking about, let me butt in here, Olamofe, talking about the value of the Naira now, we are looking at political activities also taking shape as campaigns have begun now. We're seeing a low now of about 734 Naira exchanging against the greenback at the parallel market. Well, it's almost unchanged looking at what's also playing out at the I&E window. But going further now, what's your outlook?
Say that again?
What's your outlook for the currency value of the Naira going forward as political campaigns are intensifying?
Yeah. So if you look at what the CBN is trying to do, one of the things that informed their decision to increase CRR and also MPR is because they are beginning to play what will likely play out going forward. And bearing in mind campaigns and electionary spending, right? And see now they can take away liquidity from the system, so it doesn't really offset now. So, but ultimately, we still expect that in the absence of improvements in FX generation, especially given the fact that crude oil numbers are quite low, there could be more downsides to the Naira going into the year. It's just a couple of. It's more like you are trying to revive the Naira first from the demand leg, but the supply is not really encouraging, right? So there's a need for them to actually do so much on the supply leg, right? So that you can actually complement what they are trying to do regarding for the demand leg. So yes, liquidity is going to tighten for the Naira, but we still expect that if we don't fix the right knots, from FPI inflow is still low, good production numbers still remain subdued. We could see the Naira test new lows in the parallel market.
And just wrapping up the conversation now, tomorrow marks the last working day for the month of September as well. Doing a forecast for what might likely shape up the month of October. Let's have your take on that.
Okay. So, yes, I think for the month of October, regarding fixed income, yields we expect it to trend northwards, further northwards. I mean, there are a lot of factors that support that. We'll expect that factors that borders around inflation, revenue generation, global rich environment to speak to uptrending yields in the fixed income space. For the FX market, I think I already alluded to that. I think we expect to see further downsides in the absence of improved inflow of FX in the country. For the equity market, I think we expect to see profit taking and a bearish, and that's a reduction in the gains we've seen thus far in the year play out. So, I mean, the market is going to go down. I mean, compared to what we have seen thus far. So, we continue to see investors sell off and spend their investments in the fixed income instruments.
Thank you so much for your time on the show today. It's been a pleasure speaking with you, Olamofe Mathew, sell-side analyst at EDC Securities.